Hello dear Forex traders, welcome to IFC Markets. You are watching weekly market overview on IFC Markets YouTube channel. Let's start. The previous week, the British pound was the biggest winner of the list of major currencies against the greenback, printing a 0.80% of gains. The euro climbed versus the US dollar by 0.24%, achieving a fresh monthly high. Neutral trading prevailed in the Swiss franc the previous week, ending with 0.00% change against the US dollar. At the same time, the US dollar against a basket of its major peers declined slightly by 0.05% as a result of partial North American holiday week. Finally, the Australian dollar, the Canadian dollar and the Japanese yen were the losers of the week, falling by 0.69%, 0.87% and 1.14% respectively. The US dollar the previous week did not move much as the US market participants were on Thanksgiving holiday. Nonetheless, the British pound picked the chance to increase its territory and rose to a more than 2-year peak at 1.6380 against the US dollar. United Kingdom GDP data showed that economy grew by 1.5% for the third quarter in annual terms, which is the highest since March 2009, and that maintained bullish sentiment on the sterling the last week. Moreover, the sterling was underpinned by Bank of England's announcement at its financial stability report announcing the increase of its stimulus on housing sector. On the other side of performance map, the biggest loser of the week, the Japanese yen, was under heavy selling pressure during the previous week, initially due to risk appetite improvement amid Iran deal on nuclear weapons with world powers. More importantly for the yen, trading expectations that Bank of Japan is ready to add to monetary stimulus for achieving 2% inflation further weighted on the currency. The USD JPY advanced to a 6-month high at 102.57, approaching key resistance at 103.68. The upside bias remains strong in the medium term, supported by stronger than expected Chinese manufacturing PMI, which improved risk sentiment. Technically, like we have previously stressed out, the Forex pair is on positive structure after breaching the symmetrical triangle, and based on this pattern, the target price is set at 108.95. The Australian dollar continued its downtrend the last week against the US dollar on expectations that the central bank is going to adopt further accommodative measures to depreciate its currency. However, technically the AUD USD was overextended to the negative side, and that forced traders to cover short positions. As a virtue of that, we saw the pair drawing support at 0.9052 and bouncing slightly on Thursday and Friday. Selling pressure remains firmly though on the Forex market, and downtrend suggests lower price levels. Nevertheless, we recommend cautious trading ahead of Reserve Bank rate decision on next Tuesday. Elsewhere, the USD CAD advanced the last week according to its upside structure and managed to inch above a key cap at 1.0605, achieving a fresh 34-month peak at 1.0628 on Friday. The Canadian dollar was underpinned by stronger than estimated Canadian GDP data just before finishing the previous week. However, currently overbought indicators create concerns of a bullish continuation. On the data front, the coming week will be very busy, starting with Chinese manufacturing data and then followed by European manufacturing PMI. The mostly significant events are the monetary releases of Reserve Bank of Australia on Tuesday, then Bank of Canada, coupled with Eurozone GDP data on Wednesday. Next on Thursday, Bank of England and ECB monetary announcements would attract market attention, as well as preliminary US GDP data release. On Friday, the market will close the market with the most important news of the month, the US non-farm payrolls. You are watching weekly market overview on IFC Markets YouTube channel. Do not forget to subscribe to our YouTube channel and follow us every Tuesday. Goodbye.